Back to the charts, Big Boss Crypto, and today we'll do some technical analysis on Bitcoin and why the Bitcoin and crypto market has not bottomed out yet, and why it's a big bull trap. We'll do some technical analysis on Bitcoin and see why this potential area, as you see on the chart right there, is the most likely bottom area for Bitcoin, and why we won't see Bitcoin bottom out until the DXY, the US dollar currency index, has reached its potential top in this area. So without further ado, let's look at the charts. Alright, so on the weekly time frame, as you can see here on Bitcoin, we have basically done this like sideways choppy price action ever since summer of last year, basically. And as you can see right there, it's basically just been choppy, all the way around, and not a clean price structure per se, and we have not seen a proper double bottom being formed yet, as to indicate that, according to the market structure, that the big market maker and institutions and whales always use, as we have shown many times in our previous videos. Basically, we can't be bullish yet until we can see the big dogs stepping in and basically preparing for the next bull run, which is not quite yet, as we basically have to deal with inflation and the bad macroeconomic environment that's currently ongoing. But if we ignore that and basically look at only what the chart says, we have several confluence areas pointed to this area right here, ranging between roughly 11K to 4K US dollars, being the rough macroeconomic, being the rough historical bottom area for Bitcoin. So if we look at something called the 1.618 trend-based Fib target right here, which basically, if you use a trend-based Fib extension tool from basically the 2021 high of April to the summer lows to the all-time high. And as you can see right here, we have our 1.618 trend-based Fibonacci target at 10,672 US dollars. And as you can see right here, basically how prices reacted to this Fib area. So as you can see, first it bounced in June of last year, right at 1.414 Fib. Basically got rejected at 1.272 Fib. Got under 1.414 again, basically meeting resistance once again, preparing for another leg down to potentially this bottom area. And not only that, if we take away this fib and zoom out once again and use our regular Fibonacci target retracement tool from the summer low to the all-time high, we also have further confluence areas to this price area with basically our 1.414 target at 12K and our 1.618 regular Fibonacci target at right about 4,000 US dollars, which is basically, I strongly believe that the price won't go lower than down than this area right here. And as you can see right here, we see how price has reacted to this Fibonacci target, the 1.272 target, and basically expect the price to reach at least its 1.414 target right here. And if we unhide that, and as you can see, if we switch to the monthly time frame and looking historically, this has been a key area with key monthly support levels. If we look all the way back, ever back since 2019, and even the 2018 bear market bottom of the previous Bitcoin cycle right here, this has been a strong historical support area, especially since the March 2020 lows when we had the craziness in the market right there. This was a strong support area, and this is also where a lot of liquidity resides. And if you don't know about liquidity, basically the big institutions like whales basically need liquidity in order to fill in their orders, and without that, it will be much harder for them to basically fill in their orders and prepare for the next bull run. And this is why it's super attractive to the big institutions and whales. Moving on to the DXY, we can see right here on the monthly time frame how the DXY has reacted to the historical and crucial Fibonacci support and resistance areas. As you can see right here, basically I've drawn a Fibonacci tool from the 2001 high of the US dollar dominance index to the 2008 low right here. And you can see especially how the US dollar dominance index has reacted to the golden pocket area. And if you don't know about the golden pocket area, it's basically the area between the 0.618 fib and 0.66 fib, which is called the golden pocket, which is a huge and crucial either support area or resistance area. And as you see right here, where you see the DXY has tapped into that area in 2016 and 17 as well, got rejected heavily. As you see right here, it began a sharp down move down. And basically, with the DXY, why it's so important is basically when DXY is in a downtrend, basically the use dollar dominance index losing its basic value. It usually indicates a big bull run for stocks and crypto, and vice versa applies when the DXY is bullish, then crypto and stocks is bearish. As you see right here, it got rejected in 2017, retapped it once again in 2020 when we had all the craziness going on in the markets. And basically, as you see right here, it had a big down move, and where we had basically had a big bull run in 2020 to 2021. However, if you can see right here, we can see that the golden pocket has turned from resistance, historical resistance, to basically strong support, as you can see right here. If you go on to weekly time frame, basically everyone on crypto Twitter and YouTube has said that this move, downward right here, is super bearish and basically we will begin on next bull run. And that is not true, as look here, we basically overextended. We had basically a huge parabolic uptrend, and of course you need a correction for to basically sustain the upwards movement. And as you can see right here, the DXY held the golden pocket area as support instead of resistance pretty strongly and on point, as you can see right here. And we've drawn this many months back and said that this will be retested as support. And if you don't believe us, look at our previous videos on the channel. And as you see right here, it's holding the support area strong, and we're basically preparing for our potential top right here. If we zoom out, hide that Fibonacci, excuse me. If we zoom out, to basically this key resistance area in between 128.8 to 144.6 roughly being the most likely top. And how we got that is basically if we use one of our fib retracement tools right here, and we basically got it when we drew the DXY top from the 80s to the 2008 lows. And as you see right here, we have another big golden pocket Fibonacci resistance level area in between 128.8 to 132.75. And also, for further confidence, if we take our the fib level side drew recently, we have our impulsive Fibonacci targets right here, the 1.272 fib and 1.414 fib, ranging in between 134.7 to 141.85 roughly. So, in my opinion, and this is not financial advice as always, personally I strongly believe that we will top at this key resistance area right here. But if I had to do my guess, I most likely believe that we will top at around 128.80 to 132.75, in my opinion. That's all from me. Thank you so much for your time. Leave a like, subscribe if you enjoyed the video, or leave a dislike if you didn't. Please note that this is not financial or investment advice. It's only for educational and entertainment purposes only. This is Big Boss Crypto, the realest of the real of crypto YouTubers. Have a wonderful day, everyone. Big Boss out.